Being an accountant, debits and credits, the one thing that absolutely everybody is just confused about when they're becoming an accountant. So if you are studying for CMAP, ACCA, ACA or any accounting qualification and you want an easy way to remember your debits and credits, then this video is for you. So let's roll the intro and let's just get stuck straight in. So let's go. Welcome back to my channel. My name is CRAIGO and I'm a fully qualified chartered accountant. And today I'm going to be speaking about debits and credits. Debits and credits make up the fundamentals to record and bookkeeping as an accountant. So it's important that you know exactly how to record the debits and credits within a financial statement. So today I'm going to give to you a simple technique that I use that enables me to get my debits and credits right every time. And that's where today I want to introduce the acronym DEADCLIC. You're probably wondering what DEADCLIC is. CRAIGO, what is DEADCLIC? Let me explain. DEADCLIC means debits increase expenses, assets and drawings. Credits increase liabilities, income and capital. And the simple process that you should use when performing your double entry is to identify what your transaction actually is. Apply the 2 or 3 elements to the model. Have you got an expense, an asset, a drawing? Have you got a liability, an income or capital? And then from there you will be able to identify whether you need to debit or credit your account. So today we are going to look at 3 examples around how to use the model and how it enables you to become far more consistent and far more accurate with getting your debits and credits correct. So the first example that I want to give is when purchasing inventory on cash. So let's first of all identify the 2 elements of a purchase of inventory on cash. So the first part of the transaction is the inventory that we will be buying, and the second part is the cash that we use to pay for that inventory. So in short, we are going to be receiving inventory. Therefore, we need to increase the value of inventory within our books. Therefore, if we go through the model, debits increase expenses, assets, inventory sits under an asset as a current asset, and therefore we need to debit our inventory account. Now to pay for that inventory, we've used cash. Cash will also be an asset to the business, and therefore we need to reduce our cash because we've used that to pay for our inventory. So quite simply, we will debit inventory, credit cash, they'll net each other off within assets, and you'll have essentially a net nil impact. Now let's look at an example of an accrual. And the reason I'm using accrual is because this is heavily used when preparing your financial statements. If you have a liability for an invoice that you are yet to pay, then you will need to raise an accrual into the books to basically say that you have this cost that you will be incurring. And by recognizing it now, you are recognizing it at this exact moment in time. So what we need to do is create an increase to our expense account. Therefore, we want to debit increase expenses. So we're going to debit our expense, and we also need to increase our liabilities because we have an ongoing cost to the business that we are yet to have paid for. So credits increase income, liabilities, and therefore our simple entry is to debit our P&L in the expense account and credit our balance sheet, which is the liabilities account. And now I want to go on to a bit more of a complex example, and that is making a sale to the business. And when you make a sale, the customer can pay in 2 ways. They can either pay by cash, which we saw in the first example, or they can pay by credit. Now, if you pay by credit, you will obviously have 2 sets of transactions. So you will have the initial transaction, which is the purchase of the goods on credit. And then you will have the settlement from the customer to you for the credit purchase. And therefore there will be 2 transactions involved. And the first step that you want us to take is recognize the revenue versus the transaction. So if we go back to the DEADCLIC abbreviation, you'll remember that credits increase income. Obviously revenue is income. So we need to credit our revenue account with the value of the credit sale. So let's say £10. So we're going to credit our revenue account £10. But we obviously need to recognize that under the asset side of the business. And for those of you that are aware, we have what we call under current assets, the accounts receivable account. And this is for balances of money that we're expecting to receive from our customers. And because it sits under assets, we know that debits increase assets and drawings. Therefore, you need to debit your accounts receivable account under current assets. Therefore, we have a double entry of debit accounts receivables and credit sales revenue. Now, that's all well and good, but we still need to collect the cash off of our customer. So then we need to recognize that transaction. And in order to increase cash, cash is classified as an asset. We will need to debit our cash account. So the customer sends us the money, £10, we will debit cash £10. Obviously, from the previous transaction, we had an amount sat in our accounts receivable balance. So we need to write off that accounts receivable balance. And you may recall previously that accounts receivable transaction was a debit. Now we need to write that accounts receivable value off. We're going to credit the accounts receivable transaction. Now, if you look at them side by side, you will see the debit from accounts receivable will net off with the credit in accounts receivable, leaving you with a netted double entry of credit sales revenue and debit cash. So if you refer back to the dead click model, you will see that cash is an asset, therefore we debited cash, and you will see that income is increased with a credit, therefore we credit income/revenue. Now I hope if you have found this video because you are struggling with your debits and credits, then this model will help you to understand how you can get your debits and credits right every time. Now if you did enjoy that video and you really found it useful, then please can I ask you absolutely obliterate the like button and subscribe to my channel. The support you give me is very, very much appreciated. But that is all from me today, and I look forward to the next one. Until then, I'll see you all again soon. Goodbye. Ciao.